Howdy, folks. Welcome to another Thursday and another Building Equitable Economies webinar. Our focus today is on racial and economic equity in homeownership, really focusing on affordable homeownership in the state. We have a fantastic lineup for you today, and we want to thank the Zuckerberg Initiative for supporting this work. You'll be hearing more from Ruby Valeria Schifrin from the CZI here in a little bit, who will be your cruise director, tour guide, moderator for the day. Next slide, Lauren. Hi, I'm Micah. We can probably take that slide out. That's two Micahs is one too many. All right, so quick housekeeping, webinar's being recorded. For the speakers, please keep your microphones muted when not speaking. So for everybody else, and I see lots of folks are joining us, if you have questions for any of the speakers or questions generally about affordable homeownership versus life, please do input them in the questions panel, which is in that little fancy doohickey over on the right side of your screen, and we will get to them here later on. Next slide. Super quickly, who are we? For those new friends that we have here today, California Forward really aims to create an ecosystem of equity to make sure that California's economy and government works for everyone. That means we start with the evidence through our California Dream Index to understand how people are doing by ethnicity, by community, by education, by income, on a range of top 10 measures, from access to clean water to early childhood education to housing affordability across the state. We really root ourselves in communities. We do that through our growing California Stewardship Network, which is a group of economic development corporations, community foundations, and other types of groups that are really focused on balancing economic opportunity, social and racial equity, and environmental sustainability. We then come together, hopefully this year, literally in person coming together at our California Economic Summit, and to really work on these policy issues. But then the summit is just the party at the end of the year where we set our plans for the following year. And we're working really hard right now on a range of different plans that have come out of the summit from last year. Had a great success on investment in forest management, working very hard on broadband. And we do that through our California Forward Action Fund. And so really push things very hard. And one of the things that we're pushing hard that you'll hear about later is a new paradigm on homeownership, really focusing on racial equity. And we're doing that in partnership with my friend John Gamboa, who you're going to be hearing from about this effort a little bit later in the webinar. So next slide, please. All right. So I mentioned the California Dream Index, and you're going to be seeing a report that we just released on racial equity and homeownership that has a lot more data. My friend Patrick Atwater will be doing that presentation. But let's just look at home ownership across California in the last decade. It's gone up modestly for Asian Americans, but it has actually gone down for African Americans, down for Latino folks, and even down for Caucasians, although the levels are such that there is more Caucasian home ownership. And that really, we have to ask ourselves some hard questions. We had this long decade of run up in wealth. We had this period of time when we believed as Californians that we cared about racial and economic equity, yet we're going backwards on this key tool for building multi-generational wealth within our communities. Next slide. So what are we going to do about this? Well, I'm going to hand it over to Ruby. She's the Director of Housing Affordability at the Zuckerberg Initiative. And we all agreed before the webinar that 56 minutes from now, this issue will have been saved, totally taken care of for the entire state. But Ruby, thank you so much for being here with us today, and really appreciate your partnership on this issue.
Yeah, thank you so much for having me. I really appreciate it, and appreciate all the work that you guys are doing. CZI, just to give folks a quick recap, at CZI, we believe everyone deserves safe, accessible, affordable place to call home. Our work is anchored in the 3 Ps, right? Producing more housing across income levels, protecting residents, and preserving existing housing. And we believe that a collaborative, multi-pronged approach is essential to rebuilding our housing system and dismantling systemic inequities. We use grant making, advocacy, research, storytelling, and technology to support groups on the front lines who are working towards housing reform. California's housing crisis resulted from decades of racial and economic inequities, which have disenfranchised countless generations of residents and disproportionately affected communities of color. The California Forward report highlights pervasive inequities within our housing market and homeownership, inequities that have actually worsened over the past few decades. Nationally, in 2018, only 42% of Black households own their home, compared to 73% of white households. This homeownership gap is larger than it was in 1968, before housing discrimination was legally outlawed. In California, home buying has dropped 50% since 1980 for Californians aged 18 to 34. And for Black Californians of any age, that number has declined over 20% since 1980. The report also highlights the role of family and generational wealth, right, for first-time home buyers. And as we know, communities of color often don't have that kind of family support and intergenerational wealth. So once again, we're operating in this upside-down equity pyramid where those who have the most continue to have the most. One thing that really was striking to me too is that researchers have estimated that homes in Black neighborhoods are undervalued by an average of $48,000, amounting to $156 billion in cumulative losses. And also, as we know, and this report kind of states, is that the state has been underproducing housing for the past few decades. According to one study, California has added 308 units for every 1,000 new residents since 2005. And we know that we can't just build our way out of this. We must also address the discriminatory practices that not only got us to where we are today, but that continue to hold communities of color from economic opportunity. Things like exclusionary zoning, predatory lending, and discriminatory credit practices have created housing affordability crisis that we see, right? Single-family zoning and other onerous zoning regulations in particular restrict our housing supply, increase home building costs, and codify economic segregation, making high opportunity, well-resourced neighborhoods unaffordable and inaccessible to low and middle income households. So to build a more equitable future for California across the state, especially for communities of color, we must work together and take a multi-pronged approach to build a more inclusive future. And we really believe that transforming our housing system is an enormous undertaking, right? That needs the cooperation and collaboration between the business, civic, advocacy, and every sector. So with that, I'm actually gonna pass it to Patrick Atwater, who is the senior research analyst of California Forward, who's gonna talk more about the report.
Thank you so much, Ruby, for that kind introduction. If Lauren, you could go to the next slide. As well evidenced by the data that Ruby just shared, California's, the simple reality is that California's commitment to racial justice and economic inclusion is meaningless without dramatic changes that make homeownership a possibility for marginalized racial and economic communities. So over the next few minutes, you'll hear new data that shows how that really makes that case and illuminates the path ahead to tackling that challenge. Over the past year, one of the members of our California Forward Young Leaders Advisory Council, who are really rather wise for their age, one often cited the fact that they never heard the phrase equity used as much as they had before, in the rest of their entire life. And there's a lot of that rhetoric and talk about equity. The simple question that we really have to be honest with ourselves is, when we talk about these progressive values and commitment to racial justice and economic inclusion, we have to be really honest about where is the progress. Because as Micah, showed with the California Dream Index, in a lot of ways, California, we've not been going in the right direction over the past decade. Lauren, if you could go to the next slide. The state today actually lags the nation, and we're 49th out of 50 states just as a whole in home ownership. And, to really emphasize a couple of the statistics that Ruby mentioned, since 1980, the number of young Californians under 34, this was the state where it was, the adage was always go west, young man, young woman, and, half, the rate of home ownership has actually declined in half since 1980 for young Californians. And it's actually the rate of young Californians that are still living at home with their parents under 34 is actually doubled. And those are predominantly communities of color. And as Ruby mentioned, there's a truly astounding statistic that, the homeownership rate for Black Californians was higher prior to 1968, when there was very de jure racist laws on the books. So if you go to the next slide, Lauren. When you look at whether it's the differential access to the GI Bill, whether it's redlining, whether it's the ongoing bigotry in the mortgage market, the reality is that California's skyrocketing home prices compound those moral debts. Let's consider a simple example. If you were a family that maybe, great-great-grandfather fought in World War II, was able to buy a home in California as a result of the GI Bill, or moved out here in the 60s. If you have that home ownership, you benefit. There's two ways. One, you're benefiting from all that asset appreciation and building wealth by owning that home. But if you're not, if there's a family that was denied those through racist and bigoted practices and laws, the reality is that, well, one, you're missing out on all that wealth building. And then two, it's a double-edged sword, because now housing prices being what they are, it's, you could be doing all the right things, earning a good income, earning like a very good income for much of the country, and homeownership could just be out of reach. The reality is that the price, it's just, the math is what it is, and it's extremely difficult to buy a home. And as a result of that, we're in the situation today where there's just a tremendous wealth gap. And you look across the state, Black and brown families have 13 to 20% of the household wealth as white families. And if you zoom in a place like Los Angeles, that could be close to 100 times, which is pretty astounding. And as a result of that, in the prices being what they are, you're seeing more and more the importance of intergenerational wealth and, parents helping out kids in buying their first home. It's upwards of, some of the statistics I've seen in around San Jose, it's upwards of 40% of homes. So as a result, Lauren, if you can go to the next slide, we're confronted with the reality that today there's an approximately $62 billion gap between what Californians are making a typical income, between 60 and 150% of area median income, and what a typical home where they live costs. Now, that's just an astounding number. And let me note also that is looking at this from kind of a personal finance accounting perspective, looking at what is the actual household income that we see in the census microdata, and looking at what an affordable house would be if you're using the personal finance rules of thumb, and comparing that to the actual median home price in all of those regions. And if you go to the next slide, Lauren, this is particularly acute, unsurprisingly perhaps, in much of coastal California, where you see the pretty astounding reality where much of Southern California, places like Los Angeles, Orange County, no one is able to actually that is making near a typical income is able to actually afford a home, a typically priced home, a median priced home where they live. The Bay Area, despite, it's, while it has some of the highest prices in this country and definitely in the state, all people there also earn higher incomes. And this is particularly acute if you go to the next slide for Californians of color. where there's just a tragic gap between people that are making good incomes, but the housing prices what they are. It's just incredibly difficult to actually be able to afford a home. So what can we do about this? Lauren, if you can go to the next slide. There's an incredible importance to provide targeted solution where the market will continue to fail without augmentation. And later you're going to hear about some really tremendous work that Cal HFA has been doing to expand and build Black home ownership. And as Ruby mentioned, we care about all of our 3 Ps. One of the things that we really have to be clear-eyed about is that we've really fallen short on the production piece. That over the last couple of years, we've actually been going in the wrong direction. And part of that is due to COVID, but part of it is actually happening before that in terms of producing the number of homes that will be needed so that we can make normal housing actually affordable for people that are earning a typical income. So that's where we put as our, the first recommendation is around maximizing the ability of the private marketplace to meet California's affordable homeownership goals as the primary vehicle for achieving racial and economic equity. Because when you look at the realities of just the magnitude, of that $62 billion gap that we're talking about, and when you look at the reality of, this is a systemic problem. This is, when we look at the realities of systemic racism, if we're going to be able to meaningfully address that, we need to be have a systemic solution. And if you go to the next slide, you might wonder, well, what does that mean concretely for how we live, work, and play across California? That there's a tremendous opportunity to build what people often talk about missing middle housing. Build things like duplexes, bungalow courts, townhomes. There's a lot of these housing typologies that actually some of them, like particularly bungalow courts in Southern California, have a lot of historical precedent. But the simple truth is that how building a house in California costs double what it does in the rest of the nation. And the reality is that that's not just because of land or labor costs. It's a lot of it is also just policy choices that we've made. It's a combination of how we zone and how we do development impacts and how we do environmental compliance. There's a whole suite of policies, and this is probably my favorite Micah Weinbergism is that when we add all this up, it's incredibly complex, and that complexity is just truly the enemy of equity. And if you go to the next slide, Lauren, when you look at these, things like bungalow courts, like these are extremely livable places. These can be, 1,200, 300 square foot homes. These are places that can help advance many of our environmental and sustainability goals around decarbonization. These are things that, existed in the past and have a lot proud tradition in places like Southern California. And these are the types of things that it's just, the reality though, is that it's very difficult to build these and to do that type of infill development today. Or, you can look at things like townhomes, if you go to the next slide, and those provide like lots of other alternatives so that, it's not just, if we're going to look at density, sometimes I hear it's like, well, are we going to become like Manhattan or Tokyo? And it's like California, we have a lot of opportunity to really thoughtfully increase density in a way that is very livable. And if you go to the last slide, I'll share my contact information if you have any questions. And I just really wanted to end that, a lot of these things that, if you look at why it costs double to build in California as it does the rest of the country, a lot of these things are really individually good goals. These are like part of the reason in terms of how a lot of things with the best of intentions, but cumulatively, all that complexity really truly is the enemy of equity. And the reality is that, as we look to the next a decade ahead, as we're trying to meet California's climate goals, California is only 2% of the world's emissions. And we don't do ourselves any favor in advancing that global climate crisis if we price people out of the market so they have to move to more carbon intense states. We really need to decarbonize in a way that enables us, that the rest of the country also wants to emulate and the rest of the world wants to copy, so that we can, win that war on decarbonization. And the reality is that as we look towards this, we really have to be thoughtful and clear-eyed about asking the question of, we have all these great progressive goals and we have all these great progressive rhetoric, as we look to the decade ahead, we really need to translate that into action so that we can build homeownership and make it a reality for more people across the state. I'll end with a quote. There was an Ezra Klein article that kind of made waves not too while ago, and he said pretty apropos that the symbols of progressivism are often preferred to the sacrifices and risks that those ideals demand, and particularly in a place like California. And with that, I would like to just say, that hopefully, just both as a young person and someone who cares about, the future and equity in our state, that we can have the courage to really take what the situation we're today, where if you look at the market and if you look at the realities of homeownership today and the racial disparities, it's kind of a breakdown, that hopefully we can turn that into a breakthrough. So I will turn that back over to Ruby and look forward to the rest of the presentations.
Thanks so much, Patrick. That was great. Really appreciate all the richness there. Up next, we have Timothy Su, the Director of Homeownership at Cal HFA.
Thank you, Ruby, for the introduction. My name is Timothy Su. I'm the Director of Single Family Programs here at Cal HFA. And I also run the finance department here at Cal HFA. Cal HFA is the affordable housing lender for the state of California. We are a lender with a purpose. I heard a great quote on NPR yesterday, and it's from MLK. It says that the arc of the moral universe is long, but it bends towards justice. I'd like to take a little bit of time today, a very quick high overview of how Cal HFA is part of the solution, how much production we do. Much of this is about production. It does boil down to numbers, why we do it, who do we serve, and who are our customers, and why did they come to us. And I'm going to when I'm done, I'm going to hand it over to Kathy Phillips, who is our Director of Marketing and Communications, and she's going to talk about our Building Black Wealth initiative. Next slide, please. One more. So in the calendar year 2020, Cal HFA helped 9,371 families achieve the dream of homeownership. In financial terms, this means that we provided almost $3 billion of first lien loans and about $100 million of down payment assistance. This is about a third off from the production level that we did in 2019. COVID did have a significant impact on our customer base. And in terms of market share, our market share is about in the high single digit of the entire California market for high LTV first-time home buyers. Next slide, please. Homeownership is workforce housing. This is a breakdown of our borrowers in 2020 by income. About 11% of our borrowers do make less than $50,000, but majority of them are in this sort of $50,000 to $100,000 band. So up to about nearly 3/4 of our borrowers make less than $100,000, and 73%. And when compared to the statewide median income, about 63% of them are under the statewide median income of $91,000. And when scaled to 150% of the statewide median income, about 95% of our borrowers make less than 150% of the statewide median income. Next slide, please. And this is probably the slide that we're most proud of. Our borrower base truly does reflect not just the state's diversity, but the needs of the state. I think some of the slides that have been shown so far demonstrates how the Hispanics and also African American Black population have lagged in terms of homeownership. And this slide does demonstrate that our borrowers are 6 out of 10 of our borrowers are Black or brown. And that is definitely the demographic that has the most need in terms of catching up on homeownership. And our first-time homebuyer program is part of that solution. So just breaking down the numbers here a little bit, about 53% of our borrowers from 2020 are Hispanics, and the statewide demographic composition for Hispanics is nearly 40%. So that means that we look at this and we say, well, we're doing better than the statewide demographic composition by about 14%. And looking at the African American Black population, about 8% of our customer base from 2020 were African Americans or Black. And when compared to the state of 5.5%, we're doing a little bit better. We don't outperform on African Americans and Blacks as much as we do in Hispanics, and it's part of the reason why we're launching our Building Black Wealth initiative. Next slide, please. This slide does also speaks to something that Patrick was talking about earlier. California, high-cost areas is really not where our customers are gravitating towards. That's not where affordabilities are found. About 5 counties in the state provide about 50% of our business, about half of our business, and these are areas that our borrowers tend to still be able to find affordable housing. The average loan size of our borrowers are about $320,000 today, and it's definitely a challenge for them to find the supply and the inventory to get their first home. Next slide, please. CalHFA has been in homeownership business for a long time. In the last financial crisis was very difficult for CalHFA, and in part because of that, we're a very strong advocate of sustainable homeownership. It is true that we're an advocate for homeownership for all. Homeownership does require some level of preparedness and readiness. So our programs do have certain overlays that is hoping that our borrowers, when they get into homes, they can sustainably stay there for the long haul. We do require homebuyer education and counseling, and we do require that at closing there is a home warranty for at least a year at the closing. And we do have underwriting standards, which I think are prudent, and when compared to the banks are quite lenient. We do have a limit of a debt-to-income ratio of 45%, and then a minimum FICO score of 660. And also last year in 2020, we also added a post-purchase and post-move-in counseling and education that should our borrowers want that and desire that to help them manage their finances, we would provide the counseling and also the education for free. So why do homeowners come to us? There's, as you know, a lot of resources and also a lot of choices out there. They come to us because we do have some very unique value adds to help them get their first home. And one is that we do have the ability to provide a higher CLTV, a combined loan to value ratio for the first-time home buyers. And the first-time home buyer space is one in which it is very high LTV business, and we do permit up to 105 CLTV, and then most of our loans are in that sort of 95 to 97 LTV range, which is a risky portfolio that a lot of times banks sort of have a hard time doing. And we also do not have what's referred to as LLPA, or loan level adjustment fee, for certain types of loans. Our menu offerings include things like condos, manufactured housing, we don't make people pay more because they are moving to a condo or they're doing manufactured housing. And if you go to a sort of a more traditional lender, they would charge you additional fees because of the perceived risks in those loan products. We don't make adjustments for FICO scores either. And we don't make any adjustments for LTV. So as you could imagine, that tends to favor the folks who are lower on the FICO score range and also perhaps are borrowing more in terms of LTV. So that's also a huge benefit that our program offers. And last but not least is our down payment assistance program. We do administer the state of California's down payment assistance program. And Patrick talked about how there are a lot of folks who may have decent income but are unable to save the money to be able to buy their first home. This is where we can really come in and be of assistance. We provide a down payment assistance program that can provide up to 3.5 points so that they have the resources to close their first loan. As I mentioned, we have launched our Building Black Wealth initiative recently, and here with us today is our Director of Marketing, Kathy Phillips. She is subbing in courageously for Ashley, who had an emergency today, and Kathy is going to go through our Building Black Wealth initiative. Thank you.
Good morning, everyone. As Tim said, I'm Kathy Phillips, Director of Marketing and Communications here at Cal HFA. I am sorry that Ashley couldn't make it. She's upset herself that she couldn't make it. She wanted to be here, but I'll do my best to fill in for her. She does such an amazing job at running this initiative, and so I have big shoes to fill here. Next slide, please. And I think it will probably be one more. So Cal HFA has been providing homeownership solutions for Californians since 1975. However, when we talk about housing solutions through the lens of racial equity, we immediately see that Black homeownership rates in California are the lowest compared to other races. And we felt the need that we should get out and increase the outreach and education to that community. For Black Americans, there are many factors that play a role in hindering their homeownership journey. This includes a history of exclusionary housing policies and practices, dwindling housing supply of affordable housing, and lending discrimination. Next slide, please. So in February, we launched the Building Black Wealth campaign, which is a part of the agency's Black homeownership initiative focused on increasing Black homeownership in California. Owning a home is a primary way for families to build generational wealth, which is why it's so important to ensure that the Black community has the education and the opportunities to become homeowners. The campaign will cover the barriers and challenges to Black homeownership through marketing and outreach that will include homeownership education and connections to resources such as free housing counseling and down payment assistance, as Tim was just mentioning. There are 3 phases in the campaign: education and awareness, which is the phase that we're in right now, programs and solutions, and finally we'll wrap up with some resolutions, which will include some of our success stories once we get to that point. Next slide, please. As of 2019, the Black homeownership rate stood at just 41%, almost the same rate as it was when housing discrimination was legal in the 60s. And I think Ruby actually mentioned this same exact piece of information at the beginning of the hour. It's quite amazing to think of that. And also, here's a look at the homeownership rates for all races. Next slide, please. So right now we're wrapping up phase 1, as I mentioned, which includes 2 educational video series. The first is a series of 6 videos that cover historical housing discrimination and barriers that Black Americans have faced in their pursuit of homeownership. Those videos are covering topics of Homestead Acts, redlining, predatory lending practices, Fair Housing Acts, Article 34, and single-family zoning. The second series consists of 6 1- to 2-minute animated short videos providing tidbits of information to assist first-time Black homebuyers in overcoming some of the barriers to homeownership. Those include educate yourself in the home buying process, determining your affordability, finding an experienced real estate professional, your credit, debt to income ratio, and finally down payment assistance. Next slide, please. So that was just a quick overview of the Building Black Wealth campaign. And even though Ashley wasn't here to present this to you, I did leave her contact information because she is the primary contact for this project and can answer a lot of your questions. But if you want to check out some of those videos that we have going on right now, visit our website at calhfa.ca.gov/buildingblackwealth. And we'll be posting any new information and all of the process of the Building Black Wealth campaign will be posted there as well. So we hope that you visit that and learn a little more. Thank you. And I'm done.
Thank you so much. That was great. It was so great to hear about all the incredible work that CalHFA is doing to support homeownership in California. Up next, we have John Gamboa. He is the president of California Community Builders, and he was actually one of the first people I met when I joined CZI 3 years ago. So welcome, John.
Thank you, Ruby. What's been going on today, the current events in the national news, etc., has made me change quite a bit what I had was going to explain or try or describe to you the new paradigm on it. So if I'm a little distracted, it's because we've had our co-founder of California Community Builders just had a stroke on it, and it's really created quite a toll on us here emotionally on it. But anyway, I'm going to do the best I can on it. I want to thank Patrick and Cal Forward for the great job and the study that they have put together. That information and statistics that think tanks gather and create for us is ammunition that is used for the tank part of think tanks, if you will, the advocacy groups on it. Without that kind of data, we can't present new ways or how-tos to address the problems that are there, that are out on it. The new paradigm that we have created, it's kind of a fancy name for something old. It's very simple. What we have done is try to create a new track to address the home ownership gap on it and add to all the good work that the housing advocates have been doing for the last 25 years on it. And those two tracks have been, one has been a subsidy track, and that is a track that subsidizes and helps homeowners, low income and moderate income buyers qualify for home mortgages. They use down payment assistance, counseling, credit repair on it, helping people qualify for the mortgages. The second track is the advocacy track. It's a track that organizations have been addressing the factors that inhibit the supply of home building. These two tracks have done a great job over the years in attacking the problem of home ownership. But together, they're not going to be enough to fill the supply need on it. And that is why we came up with a different track we call the new paradigm on it. And it's a new track, or it's a new way of addressing the issue and supplementing the efforts that are ongoing on it. The reason it's new is because we bring into play the racial equity issue, the impact that low wealth in our communities have had on education, employment, and health on it. It's also new because we bring into play kind of a missing element that it's been in the strategies, and that is bringing more of the community of color into play. The organizations that, the ethnic organizations that represent health, employment, and education, and bringing them into the battle for home ownership into it increases the number and the power we would have to make change on it. It's also new because we are trying to build a new type of alliance. We call it a CAC, a Community Action a Coalition on it. And it's new because we're bringing in vested interests who haven't been real players on it. People who make a profit or are socially interested in making the changes on it. And I'm talking about the businesses like liability insurance companies, building supplier companies, mortgage companies, all the companies who make a profit from building homes on and the construction on, but have not been true players in bringing in the social changes that's necessary and the political change that is necessary on it. There has been, in fact, today, this data that's been presented has very well documented the impact, the lack of wealth that's been created by the lack of home ownership on it has had on our communities on it. Even prior to the damaging impact that COVID-19 has done to our communities, we have the lowest wealth in the nation in California on it. And some of the information that is being supplied on it has well discussed the impact on health, the impact on education, the impact on employment. But what hasn't been discussed that has a tremendous, I think, social impact on the nation and in California is the impact that on self-esteem that is done on it. You cannot be in this country very long without all of a sudden having this subtle feeling or unconscious feeling of self-esteem. If you're white, if you come from a white community, you can't help but feel superior. The evidence is all around you. Your education is better, your employment is better, you live better. And on the opposite side, for too many minority youths, it's just the opposite. You can't help but unconsciously feel less than the white community on it. This has a tremendous, tremendous impact on our community. It creates a resentment, an anger, and a feeling of hopelessness on it. And these feelings create what I call like a gas, like an ammunition, like something that could be exploded very, very quickly, if you will, on it. And these feelings, this resentment, this anger, this fuel is just below the surface all the time. But every once in a while, it'll be ignited, and it's ignited usually by a police action or something like that. When that happens, that we have street demonstrations, we have protests, we have even things that lead up to what people call the riots on it. And this creates even greater racial divisions in our country, which we are divided so much already on it. So by bringing into play the racial equity issues on it and into home ownership, and creating home ownership as a way of bringing our community together will be, I believe, setting a trend. If we can do it here in California, it'll set a trend that will have a national impact. We have so many problems right now in our country. We're divided by party. We're divided by education. We're divided by race. We're divided by so many things. And all these divisions are having a tremendous impact on the quality of life in our country, and it's actually impacting, I believe, the future of our democracy on it. So that this new paradigm, I think, if we're able to pull it off and have it done, is we can start bringing together the races. We can start building the wealth that will improve the education, will improve the employment in our communities, and it'll be a much better place for our future, our children and our grandchildren in the future. I've gone all over the place because I discarded what I was eventually going to talk about, because what's happening in the streets today, what's happening in our country, has certainly impacted us. And we have an ability, I think, here with this group, with our partnerships that we're building, to really make a real change on it. And that's going to depend on having the ability to look at the problem of home ownership as more than a housing crisis, but actually a civil rights and equity and poverty issue. So anyway, that's in a real nutshell what I was going to give in a bigger presentation on it.
Thank you so much, John. Really appreciate you reminding us and bringing us back to the emotional and psychological toll that racism has, right, in our state and in our country, and how it shows up in our housing. I mean, where you have the ability to live and how you have access to housing is belonging, right? And so how are we making sure that folks feel like they belong? So with that, we're going to turn it over to some questions. We've had some really good ones. I want to start with Patrick. What type of strategies and solutions is California Forward advocating for in response to this new report?
Thank you. And first thing I would note is that California Forward, we like to take a regional approach. California is a very diverse state geographically, in addition to racially and ethnically. So if you go onto our website, you can also see we've developed, through the support of Wells Fargo, a series of regionally specific recommendations and strategies around how we can address and increase home ownership. And then the other things that we're talking about is there's a lot of opportunity for common sense reforms. So we're in conversation around things like by right development, ministerial approval of housing, things like that, looking at taking a very clear-eyed look at how we can really meet a lot of California's environmental goals in a way that actually translates into decarbonization on the ground. And so looking at holistically across like all the different fees and rules that are applied.
That's helpful, thank you. This next question is kind of a couple questions here, but the Cal HFA, I think you guys might be best suited to answer this, but happy to open it up to Patrick as well. What about ADUs and leveraging renovation loans from HUD and Fannie and Mae? Have those kind of alternatives been evaluated in supporting homeownership?
I could take a stab. Yes, most definitely. We are in the middle of working on a bigger and grander plan on ADU that we're hoping that we can launch in June, which is Homeownership Month. So stay tuned a little bit. But we realize that so far there's still certain barriers in the ADU space. It's true that certain locals, as you know, have done a really good job of lowering some of the barriers which have been in place. Some of that due to requirements from the state, but nevertheless, it's good to see those barriers coming down. But in terms of construction financing, in terms of gap financing, I think there are still some issues there, and we're in the middle of actually trying to be part of that solution as well.
Great, exciting. We'll stay tuned. John, I think this question would be great for you, but also Timothy, I think you could probably weigh in here too. Are there statewide organizations or efforts working on land trust models, right, where land is held in a trust while the housing is owned by homeowners? This is something that can keep housing more affordable, but also suppresses the value. So how do you weigh that trade-off with affordability and thinking about the kind of wealth building side of this?
We're not experts in land trust, but it does address some of the needs. In other words, that if we're putting, let's say, assistance into homeownership, how do we keep that housing stock in that affordable space versus, let's say someone cashing out and taking the equity with them. We did a really interesting project recently in which we supported the land trust of Sonoma County. We ensured we gave them a gap financing so they can develop, I believe it was about 7 manufactured housing on some land that they got from the locals. And that could be a really interesting model to replicate. And it was definitely a pilot that we thought about could be an interesting model to replicate. And I think that the financing there could actually be when the perm is ready for takeout, it could actually be conforming Fannie Mae loans. So there are some potentials there, and those experiments are being done, and I think that it's worth supporting them to see if there's any possibilities for scaling them up.
John, do you have thoughts on that too?
Yeah, I think the land trust is a small step toward creating wealth in the community, but it's limited on it. We would rather see other forms take place, full condos and other means through ADUs and others. But it's not to say that land trusts don't have a place on it, but it doesn't make a big impact in our community, not big enough. It restricts the homeowners too soon and doesn't allow them to have the flexibility they would need to move up.
Yeah, great. So Patrick, question for you, and I would love to hear, John, your response to this too, is, you guys kind of outlined some solutions in terms of how we can address this. We've known about a lot of these problems for a while, right? Not all of this is new information. It's still great to get the data and a little shocking sometimes. But what do you think are the biggest barriers for us to get there? Is it money? Is it political will? Is it NIMBYism, right? Like what's the one thing, if you could point to it and say, I'm going to wave my magic wand and make that disappear?
If we take a really honest look at how we plan and develop our cities in California, that whole planning code, it's, by and large, that whole paradigm, to use John's phrase, was, developed in, like the 60s and 70s. And it's pretty urgently in need of, even if you just think of like land use, like the way that we break it down in terms of residential, commercial, industrial, if you look at like how work is changing, it doesn't necessarily make sense in a lot of ways in terms of how people are working from home or all sorts of things. So if we really were, thoughtful about how we can modernize and kind of reimagine how, just we plan and, integrate and, build and develop our cities, I think that would go a long way, because that kind of touches on, all the pieces that make it so expensive to build.
Ruby, I think that the biggest inhibiting factor or the need is to combat the special interests that have stifled the building or new supply on it. The misuse of CEQA, the stranglehold building trades has on misusing prevailing wage for low-income housing on it. The zoning issues on those. We need to develop more political and social will from the community that leans on our legislators. What's really disappointing is we have more minority legislators than ever before in the future of California, and yet minorities' quality of life in California is getting worse and worse on it. We need to hold our legislators more accountable, and to do that, we got to have our community working together, and that's what the new paradigm is attempting to do.
Yeah, I love that. So this next question, I think this is Patrick and Timothy. I think maybe it would be great to get both of you guys' thoughts on this, but there's been a few questions about high development costs, right? And the high development costs which drive high home prices. And so it's really hard to build for middle to low income owners. I'm talking about like 80% 60 to 80% AMI, right? So what are some ideas you have around working with developers to incentivize that kind of development to address that part of the market? Put you on the hot seat.
I'm not sure if I have a great answer for that.
I can take a stab, I guess. When you look at development impact fees can range widely across California. Turner did a great study around that, and you see it ranging upwards of $150,000 in some cities. It really depends on the units. So I think what you really need to do is, when you ask people when they think of affordable housing, they often think like, what's a home that I can buy that's affordable? They don't necessarily think of, what the policy wonk thing, which is, what we mean by that is like a special program for, government subsidized housing. So that's where I think where we really need to take kind of a holistic take around what are the things that are making it so expensive to build here, and why is it that you see, you can see built new construction that is like single family homes in more of inland California, or you have, super expensive, the like luxury condos that people love to hate in places like where I live in LA. But, where the whole middle is kind of missing in terms of, condos that are more affordable, townhomes, bungalow courts, like all of those things that there's those development fees make it prohibitively expensive.
I'm not sure if I have a great answer on this one. The one thing is that the market forces that are in play sometimes are greater than any one of us, even combined. I have heard that, I'm not exactly sure what has happened in the last year or so, but there was a stretch of time about 2 or 3 years ago when I was tracking this, that at some point the margin for, let's say, the Toll Brothers of the world that building $1 million homes does get compressed, and then there's sort of like a natural tendency to come down the income spectrum as they're building homes. But those are not things that I would say that we here have the wherewithal to impact. We do one little thing I think that is helpful. We do provide more down payment assistance for homeowners who are moving into new construction, knowing that they are still a little bit more expensive. And to John's point, I feel sometimes affordable housing sort of bears the brunt of a lot of policy making objectives. As you guys all know, that new construction starting, I think, January last year, all require solar panels, which is a worthwhile goal, but it does add to the cost of building new homes.
Yeah, that's a great point. I think it comes down to trade-offs a lot of times when thinking about these different goals and what we're trying to meet. So with that, we've got 1 minute left. I'm just going to ask John, is this solvable? Or Micah, actually, I think who's going to take over? Because I'm almost done. Oh yeah.
No, that's cool. I want to hear John's answer on this.
Yeah, of course it's solvable, or else we wouldn't be working together and trying to do it. But I would like to add something, Ruby, to the problem on it that's just come up, and that is the vehicle miles traveled. It's going to add so much cost to people's ability to buy a home, and we're going to force people to pay that vehicle miles travel, which could be in the hundreds of thousands of dollars each home, even if those people have an electric car, which they won't be contributing any GHG on it. That's another issue that I think we need to address as an alliance and coalition.
No shortage of issues. Well, thank you so much, John, for your work on this, your partnership in the new paradigm. Thank you so much, Ruby, for being our moderator for the day. Thanks to all of the different presenters. Yeah, we can do this, but we need to stop digging, or rather, I guess, start digging foundations for new homes in California, and understand that this needs to be a priority for us if we truly are committed to racial equity, if we're truly committed to building a state that works for everyone and having everyone achieve the California dream. So next slide, Lauren. All right, well, we're going to be having another webinar, shocker, next Thursday at 11. Thanks for those of you who are regular listeners, viewers. And here we're really going to be focusing on sustainability, because sustainability and resilience is enormously important to us as a triple bottom line organization. And here we're talking a lot about racial equity, but these things are not inconsistent. We can build sustainable, resilient, complete communities that are also affordable for people. We can do it, folks. If you want to find out how, join us next Thursday. Thank you so much for being here today.